From the local session today, Chris Weston from IG in Melbourne joins us now. Chris, good morning to you. We did see the S&P 500 test that 1500 mark overnight. Even though Apple took quite a tumble on its news, we did see the US market continue to move higher. And this news out from Microsoft now as well, beating estimates. Earnings in the US overall have come in above expectations.
Yeah, well, I think the good thing with Microsoft is it has found a bottom. It's bounced off that $26 a couple of times, and it looks like it's it needs that catalyst to move higher. And I'll be interested to hear what they have to say about Windows, because everyone was expecting very slow sales there as well. It's been a darling for earnings season. I think it's beaten on the EPS line on the last 7 out of 8 quarters. So if you are looking for that sort of trade, you would have done very well based off historical situations. But then again, if you put it into context, Apple's beaten revenue 6 out of the last 8, and if you'd bought it going into that earnings season, you would be you'd be licking your wounds today. And I think what we did see from Apple, and you wonder where the S&P would have been had it actually come out with a good result. The S&P trading up to 1502 and then finding sellers are at just above that level. But the Apple numbers, they're okay on the iPhone sales. I mean, they're record numbers. That's what people will be talking about. But what the problem is with Apple is that they've had a history of giving very, very conservative guidance, and the market's just said, we don't believe a word you say. The streets continued with their above consent or above their Apple's own guidance, and continued with that for many, many quarters. And what Tim Cook actually said last night is that the guidance that they've given, 41 to 43 billion on the revenue side and $10 from the EPS side, is actually quite realistic. And the street's position significantly above that. And they're saying perhaps it's time now to actually believe Apple's guidance. And that's the situation. That's the problem. That why we saw the significant sell-off. The significant sell-off, also the fact that there was very little short interest in the name despite the big sell-off we've been seeing. And I thought a really interesting statistic that we saw yesterday, and that post-market sell-off yesterday, where we saw it drop, I think, significantly in that 30 minutes after market, it lost $54 billion worth of market share in 30 minutes. That's the equivalent of Telstra going bankrupt overnight and being wiped off the ASX. It's a huge amount of market cap that's been wiped off. 200 billion or so since those September highs. It's just a mammoth, and it's still significantly higher than the second place, which is Royal Dutch Shell. But if it continues in this downtrend, and it's broken the 2008 uptrend on the weekly charts, if it closes below $470 tonight, that would be technically quite a bad signal for Apple shareholders. It doesn't look like you really want to be buying on the technicals anyway. But I think really interesting thematics that are playing.
So you wouldn't be buying at the moment, even though it is starting to look really quite cheap and could get even cheaper?
Well, that's why I wouldn't be buying it. The fundamental guys will be saying, look at the levels of cash flow these guys are generating. Significant numbers there. What are the catalysts at the moment? It's trading on about 10 times, revised earnings that I saw from Goldman Sachs last night. Once they actually looked at the numbers and said, here we go, this is what we expect. They've got a $650 price target now, and it's still on their conviction buy list. But let's wait for the stock to bottom. Let's wait for the stock to actually show signs that people are actually feeling more accustomed to it, because it's in free fall at the moment. It's like catching a falling knife. Why would you do that? So wait for it to bottom, wait for it to start moving up. That's the way to do it. I mean, it's got really good cash flow generation. It does seem that it's still, losing a lot out to Samsung at the moment. What are the catalysts for the stock? That's the thing you've got to be asking yourself. There's going to be another 5S coming onto the market later this year. There's also going to be potentially a cheaper iPhone coming onto the market. That will appeal to the emerging market side of things, where they're trying to pick up some market share from Samsung. There's potentially going to be other bits and pieces. I think the market would have loved to have said, well, if you're so confident in your stock, Tim Cook, why didn't you come out and increase the dividend? Why didn't you say something about some sort of capital management initiatives, buying back your own stock, for example, increasing the dividend, those sort of things? I think that threw a few people out. I mean, it's cheap. There's no doubt about that, but it could get a little bit cheaper at the moment.
All right, there's just a bit more coming out on Microsoft earnings at the moment. It has come in with second quarter earnings excluding items of 76 cents per share on revenue of $21.5 billion. Analysts had expected this company to report earnings of around 75 cents a share on $21.53 billion. So coming in a bit better than expected. But Chris, given the leads we've seen overnight from Wall Street and European markets, it looks like we're going to have another solid session. I mean, the ASX 200, you just can't keep it down so far in 2013. Do you see a pullback coming anytime soon? Everyone's hoping for it.
They are. I mean, I've got to look at the US markets to start with. You know, if the US market's going to correct, we will correct. There's no doubt. Well, certainly we might outperform, but we're going to find certain headwinds. Now, what I look at the market internals of the US, there's about 75% of companies in the US now which are trading above their 50-day moving average, or at least one standard deviation above their 50-day moving average. Whenever we've seen that before, traditionally we have seen a 5% or so correction. So I think they are a little bit overbought. They'd be lofty. I certainly wouldn't be buying US equities at the moment, despite the fact that US earnings are coming in super strong. We've seen, I think we'd seen about 20% or so, or a significant number of companies repeating quarterly earnings. The ones that have, 75%, have beaten on the EPS. So corporate earnings are looking quite good at the moment, despite what we saw from Apple. But yeah, I think what we're seeing here in Australia is one, that the fear of missing out trade. You've got to be in the right stocks, because while the ASX is going up, it doesn't mean every single stock is, you know what I mean? So you've got to look at what's going up. And yesterday it was Telstra. Telstra's broken out. Again, that quasi-bond mantra really coming into its own. Some of the banks are still finding buyers in this market. So that you've got to look at actually what's going up and stick with those at the moment. But in terms of value, I think there's probably a lot of things here in Australia now which are looking probably quite expensive. Healthcare, and we're going to see those ResMed numbers, if they haven't come out a number already, you know, hopefully providing some sort of catalyst to the market. So I wouldn't necessarily be chasing, but it does seem from a broader index perspective, this market continues to want to go higher.
Okay. Yeah, well, no, we haven't seen any of those numbers from ResMed just yet. What are you expecting there from that company?
Well, in terms of second quarter revenue, I think the market's expecting good numbers there. I mean, you know, one of the really exciting products they've got is this home sleep testing, what they call HST, where they can actually bring, you know, tests for sleep apnea at home rather than individuals having to go into hospitals. And I think that's one that people are going to be looking at the price pressures there and how competitive that's being. That should really boost, you know, top line growth that we're going to be seeing there. So 364 million. That's going to be a really nice pickup from the PCP of about 333 million. Net profit should increase nicely to about 74 million. EPS, the market's looking for about 51. But we've got to look at what, you know, their rhetoric about how the rest of the world's trading. You know, we know that there's big challenges globally at the moment in terms of growth. This company shouldn't necessarily be overly adversely impacted by what we're seeing in Europe. But yeah, net margins, or gross margins, should we say, 61%. We are going to see a bit of a pickup from the PCP, and I think, you know, we're looking for some good numbers here today. But it is doing very, very well. Let's put things in perspective. The stock's up 8% year to date. Compare that to the healthcare sector, up 0.5%. You compare that to the broader market, just up 2%. It's having a great run. You've got to look at the chart though. Starts at the bottom left, finishes at the top right. It's a beautiful looking chart. You'd be in, if you're in the stock, stay with it. There's absolutely no reason to be selling at the moment, even though it's, you know, trading on quite expensive multiples. But then traditionally it always has traded on expensive multiple. Wait for those signs of reversal. See what the numbers come out today. If it is really disappointing, you're probably sitting on some nice profits and take them off the table. Otherwise, stay with the stock.
All right, Chris, all eyes on data tonight as well, with the ECB's long-term refinancing operation repayments, the key one to watch. In terms of currencies, that euro-US dollar pair looks as though it wants to break through the 134 mark. Is it going to?
I think, yeah. I mean, I think that, you know, certainly the momentum's staying with it at the moment, and that's, it's really bizarre that, you know, you think about what we've had happen over the last couple of years and so, but the euro to me now seems like one of the currencies you probably want to be owning. I think a lot of it depends on how much gets repaid tonight. I'm not exactly sure what time it gets announced, probably mid-European session, but the sort of benchmark that we're hearing at the moment from analysts is it's around about 100 billion in terms of what's going to be repaid back to the ECB. Now, the way to play it is you trade it around the announcement. If it comes in much less than that, then you're probably likely to see the euro sell off. And the reason being there is the correlation between a central bank's balance sheet and the currency. So the more expanding the balance sheet of a central bank is, the weaker the currency. So if the more that gets repaid by these different banks, different institutions, the idea will be the contraction of the ECB's balance sheet, which will be euro positive. So if it's more than 100 billion, I expect to see the euro strengthen. If it's significantly less than 100 billion, I expect to see the euro weaken, just because of the perception of the ECB's balance sheet. So I think that's probably the big one tonight that everyone's going to be looking for. There's going to be another one in February to repay back this second LTR repayments that we saw. But, you know, German IFO numbers will be very interesting. We're expecting those business sentiment numbers to increase and improve, and very much in line with what we saw from the ZEW. The correlation between the IFO and the ZEW is quite strong, so that's going to be very interesting. UK GDP. Now, everyone's bearish on sterling at the moment, so I think that's going to be one to look out for. If you're an FX guy or lady, you're going to be looking at the CPI prints coming out of Canada. We're expecting those to be quite weak. And in terms of data, in terms of companies, I think it's going to be interesting to hear some of the comments from Honeywell and Procter & Gamble. Obviously, global companies, got their fingers in many different regions, and it'd be interesting to hear their views on Europe and bits and pieces around there as well.
All right, Chris Weston from IG, always a pleasure to talk. Thank you.
Thanks, Liz.